Welcome to the Revenue Room podcast. I'm Heather Holst-Knudsen, your host and CEO and founder of H2K Labs and the architect behind the Revenue Room portfolio. This is where CEOs and revenue-critical C-suite leaders come when they're done with old-school playbooks that don't work and want the truth about what actually drives growth in a data and AI-powered economy. Every episode brings you the most interesting, forward-thinking operators in the media, events, and data information services industries. These are the people who are not just talking about the future, they're building it. These are the leaders rewriting business models, redefining value creation, and moving faster than the markets who are trying to disrupt them. What you see and hear today is shaped by the ecosystem behind us. RevvedUp, our flagship summit for CEOs and their revenue-critical C-suite teams, join to trade real playbooks, not platitudes. And Revenue Room CXO, the invite-only network and year-round growth operating system, is for leaders who refuse to fall behind. If you're listening, you already feel the urgency. The gap between the companies that adapt and the ones that don't is widening. The only question is where you'll land. So let's get into it. Today on the Revenue Room, I'm delighted to welcome Jacob Donnelly, the founder of A Media Operator, a media company built for the people who are building media and event companies. Through AMO's twice-weekly analysis, reporting, and events, Jacob has become one of the clearest strategic voices on how to build durable, profitable media businesses in a post-traffic, post-cookie world. Jacob is someone I deeply respect and admire, and I truly enjoy hanging out with him to discuss the industry. So it's a real treat for me to have him here today. Over the last few years, Jacob has grown A Media Operator from a solo newsletter, which I think was a side gig, quite frankly, into a multi-revenue line business spanning subscriptions, advertising, and a flagship event, the AMO Summit, all focused on the three-legged stool of media, events, and data. Before going all in on AMO, Jacob held senior roles at CoinDesk and Morning Brew, giving him rare operator experience across both crypto and B2B media. And Jacob's going to share a little fun side note about his career that we both share. He now spends his time working directly with media leaders on audience, product, and revenue strategy and shaping the conversation about what the next generation of media operators should build. So, Jacob, I'm so excited to have you here with me today. Welcome to the Revenue Room podcast.
Heather, I'm excited to do this with you.
Yeah, we got so much to talk about. We even started talking about it before the podcast got rolling. So,
and it's funny.
All right.
I get to do this all the time, where I get to ask everyone else questions, and people don't normally get to ask me questions. So I expect you to treat me the way I have treated every one of my speakers on my stage.
All right. Well, you just set the bar super high. You are an ace interviewer. I'll do my best. How's that? And then you can give me tips afterward. All right. All right, Jacob, let's start with my first question. You've described A Media Operator as a media company for people building media companies. When you first launched, what problem did you feel that no one else was solving?
So I launched A Media Operator in 2019. This was still the era of traffic. Third-party cookies were still the primary mechanism for most publishers getting data. I live in New York, so the stories were about BuzzFeed, Vice, Vox Media, all those players. And I just didn't think that was the right way to build a media business. And so all the coverage about the media industry was about these mass scale publications and not the ones who were actually trying to serve a clear cut audience. And so on a whim, I just decided to start writing a newsletter about it. And that was really the start. It was really just, I want a place where I could write about how I thought media businesses should be built, which was very much focused on clearly defined audiences and smart monetization.
And that actually is interesting because when you started this, and I had said in my opening, it was a side gig. You were doing it while you were the publisher at Morning Brew.
So I was at CoinDesk at the time, which was a crypto media company. Yeah.
CoinDesk first, then you brought it over to when you went to Morning Brew.
So I found the job at Morning Brew because of the newsletter. Austin and Alex, who were co-founders of Morning Brew, were early subscribers. I actually sold my very first group subscription to them. And Austin, who was co-founder and then became CEO when they sold to Axel Springer, he reached out to me and was like, look, I want you to come join, run our B2B business. I never even submitted a resume. My newsletter was the resume.
That's awesome.
That was it.
Okay, I did not know that. Okay, that's a really interesting little new tidbit of news for me. Which just before we kick off with more cool questions, what's you and I actually weirdly have a connection from. Tell us about your first job.
My first job was working at this family-owned B2B directory, for lack of a better word. In New York, I was 22, straight out of college, and I got this job doing SEO. And this company, ThomasNet, is actually a company that Heather's family, going back, I don't know, was it 4 generations?
Yeah.
Had owned. And so I remember when Heather bought her first ticket to the AMO Summit, I saw the name Holst-Knudsen pop up, and I went, oh, that's a name I haven't seen in a long time. Because like I remember seeing your brother Mark walk around the office. I remember seeing your dad walk around the office, your uncle walk around the office. So like it was yeah, my first and to be like working there is what gave me a realization that there's a lot of money in B2B media. Right. Like I always wanted to work in media. And as a 22 or 23-year-old, I was like, oh, I'm going to launch a consumer media company. I was going to go launch a sports publication because everyone was doing sports at the time. And then I saw how much money was in some of these CNC machining categories, all that. And I was like, oh, forget consumer media. B2B media is where the game is. So yeah, that it fundamentally changed my perspective.
CNC machining. That is awesome. All right. Well, listen, it's just like I have a couple questions about entrepreneurship, and it's interesting that so even out of college, you were thinking I'm going to launch my own media company. So
yeah. So I mean, all my life I've wanted to make money. I had lemonade stands in school. I sold gum in middle school. I would give gum to teachers so that they wouldn't like take my stash away from me. I hired someone to help me sell gum, and then I got chicken pox. My grandfather died, and that employee quit, and I like lost my whole business. So I've always wanted to make money, and so I was good at writing, and I thought that media just made sense to me. And so
that's amazing. And then actually just leads me to my next question. Like, it's very scary, by the way, to go all into a startup, especially when it's bootstrapped and self-funded, which yours is, as is mine. What was the like, okay, I'm ready. I'm going to do it. I'm going to give up the paycheck. I'm moving all in.
So there's a couple things. One, like I launched in 2019, but I didn't go full time on AMO until 2024. So I had 3.5 years of building an audience, seeing if the subscription business was going to do anything, seeing if the sponsorship business was going to do anything. And it wasn't until mid 2023 when I had already sold sponsorships for the first AMO Summit, sold tickets for the first AMO Summit, that I looked at that and went, wait a second, I've actually got a legitimate business here. And as much as I'm enjoying, working at Morning Brew and scaling that B2B business, at some point I've got to take a shot on myself. And so leaving Morning Brew, I took a somewhat of a pay cut, but it wasn't as bad as it could have been because I had spent so many years doing it. So this isn't like, for a lot of people, the start at zero, hope you can scratch together some money. Like it wasn't that story. I basically, a lot of people will raise money, right? I used my salary as my seed investment. And that got me to the point where I could sustain the thing off of the revenue we were making. And now we're at a point where that's true, right? Like we've got a team and all salaries, all of that, we will finish the year still profitable despite me having to do payroll, which is a new experience.
Yeah. Well, we can talk about payroll on another day. It's a total nightmare. But in any case, I digress. That's actually incredible. I didn't even put that together that you had a full-time job and you put on your first summit. My God.
When Austin reached out to me in 2020 to join Morning Brew, I told him that I was not going to stop doing AMO, and he was totally understanding of that. It was in my employment contract that a media operator was not owned by Morning Brew. It was my project. We stipulated sort of like I'll do my day job during my day job, my night job during my night job. And then in 2023, I told him, look, I think there's an opportunity for me to do an event. And he was just like, okay, do it. Uh, you know, you get lucky with bosses. And I got very lucky to have a boss who, he knew I wasn't going to be there forever. He knew that I to some extent was a little mercenary with the role I was doing. I was coming in, I was going to do the job. And when the job was done, I was going to leave. So yeah, I planned the event and had a day job.
Well, no, first of all, I think that's awesome that you had that great boss that allowed you to do that. I was actually knowing how much, first of all, your first event was fantastic. So I went and I'm the event snob. So it's hard to have me over, but, very fresh, very I love the content and it was execution wise, operationally was fabulous. The point I'm trying to make is that there aren't enough hours in the day, and somehow you found it to do your day job, which you did excellently, and then also pull off this first time event, and you actually look calm and cool on stage.
Well, give yourself a little bit of credit. You and I did a different type of event for our first event. I did an event. We had a similar number of people for our first event, but I did mine in a theater, so it was already built. Right. The venue was perfectly contained. There was I didn't have to do any real build out. The sponsorships, we had a small little room for those sponsorships. And I already had a built-in audience because I'd been building AMO for 4 years. So to some extent, and even today, if you look at the AMO Summit, to some extent, I've built it so that it doesn't consume us. We could go, and I've thought about this, going to a venue where I've got to build everything, right? Build the great stage, build all, rent all the furniture. A lot of that came packaged for me for the first AMO Summit. So the hardest part was actually just the content, right? Who am I going to get to speak? What are the sessions going to be? But oh, wait, I have a newsletter with all these great people who already read me. I looked at my paid subscribers. I mean, 60% of the speakers were paid subscribers already. Right, Neil, who was our closing fireside chat, he's the CEO of People Inc. I mean, Neil was probably the 10th person to buy a subscription to AMO.
Wow!
So I had the right people reading. So
yeah.
I could never. I admire people who launch events without a media asset backing them. I think they're insane, and that's what you did. So I think you're a little insane because you don't have a built-in audience to promote it to. It's just sort of we're going to do this thing and God help us, we're going to find people to come. That's chaos to me. So
it was
different things.
I even wrote an email about this yesterday. I was like, yeah, I walked into that event a little insane. I got through it, but I don't remember much. But yeah, no, I totally agree. All right, let's move into this. So, because I'm very excited to get to a discussion about what's happening in our industry from an M&A / exit situation, because I think there's a lot of upheaval coming on right now. So, but I think I have a great way to segue into that. But when you look at the most durable and event business, I'm going to throw events in here because you're moving into the event sector as well. And I think it's an absolute must for you. And I think you'll add so much value. But when you look at durable media and event businesses, what are the 2 to 3 characteristics that they share that most, or maybe people underestimate, that make them really solid businesses?
I mean, the answer is actually pretty straightforward. The first is, and this is literally what AMO stands for, is you've got to understand who your target audience is. And that's got to be the very first thing. And I think events do it slightly better just because they are, very much connecting buyers and sellers. But media has struggled with this, with defining who is the audience. We don't live in an era, and we never truly lived in an era where everybody could be your audience. I think the internet made people believe you could have everybody be your audience, but there is no way to serve everybody. Even the Wall Street Journal can't technically serve everybody. You look at any one of their verticals, I can go deeper than any of them can on any of those verticals if I wanted to launch a publication. They just happen to cover a breadth of business information, but they've got the scale and the resources to do that. Most media companies don't. So the first is you got to have a clearly defined audience, which is what every other business has. Every business sets out with a clear idea of this is who we're going to sell to. But then you go to a media company, the media company goes, we're going to sell to everybody. That's dumb. So that's the first. Second, and events people and even some B2B people would disagree with this. I think the most durable events and media companies of the future will spend more money, not less, on content creation over the next 3 to 5 years. I think, what consumer media got right is they did invest in content, right? Condé Nast hasn't made a profit in I don't know how long, but their content, at least their print magazines, are pretty nice. And so I think that B2B media and events businesses need to understand that average content won't cut it anymore, especially with AI, right? Like I can get the average from AI. And that's sort of what AI is it's taking all the content that's out there and averaging it up and shaking it up and, giving you what it thinks you want. So I think that there should, the media companies that work will invest more in content.
I agree. Yeah.
And then the last thing is, I think you have to find a way to get the reader or attendee to pay. I don't have long-term faith in purely marketing services oriented businesses. Like, unless you can get to true scale, I'm not convinced that model works. I'm happy to be wrong about that, and there have been some incredible successes, but if AI, goes where it's going to go, where I can ask it a question and I can get super contextual with that question, and those businesses roll out super contextual advertising products, like not only are you cutting out the publisher, but you're also now introducing way better advertising than I think we've ever seen with the internet. That puts marketing services businesses at risk compared to if you can convince the reader to give you $1, hopefully many more dollars, whether that's to attend your event or to gain access to your proprietary content and info. That's stability right there, and I think that's what will look the strongest. Now, you had Sean on the podcast recently. I know he would vehemently disagree with me because he built an incredible marketing services oriented business. But that's the nice thing about media. Lots of models work.
I think there's also a hybrid approach because you would have to have it'd be hard to get a hybrid team unless you had the dollars and infrastructure. But one, I think you're absolutely spot on, correct about content. It's content's new day. And if you're not looking at it that way, I think you're really in trouble because content is going to be your one, like you've created something that no one else has created, or you have the depth of knowledge that AI can't replicate. That's your competitive moat. So I absolutely agree with that. And two, I don't necessarily agree that media doesn't understand their audience. I think they don't understand the nuances and sectors, and like they just have this broad audience, and it's still this one to everybody methodology versus hyper personalization, like the Amazon effect when they come to your website. Give them what they want, when they want it, how they want it, and the format they want it, and assume things they want utilizing predictive analytics and data.
To some extent, I agree with that. But I think the only thing I'll push back on is a person's need for information. The more that need exists, the more they're willing to consume information in formats they might not want. And so for an average piece of content, a user is going to choose the format that they want. They want a podcast, they want a video, they want an article, fine. But if I am the only person who has that information that you want, it doesn't matter how I give it to you, right? I think it's easy to get caught up in the form and how the information is delivered rather than the fact that the information in and of itself is the valuable nugget. There's an era, we could move into an era, and my reporters would hate this, where the article doesn't matter anymore, right? And we might talk about with intelligence later, where articles aren't really the thing anymore. But it's the information, right? It's the ability to get that information. So, yes, I think some formats do better than others, but I don't think that's as important as some people might say.
Right. And I also, I think I think the advertising model in general, though, was under threat, like 100%.
I think
And
it works as a secondary model. So,
yeah, I think it's like icing now, or you know what I mean? It's not the juice.
so look at Uber, right? Look at Amazon, look at Macy's, look at all these apps. Like I opened up the Uber app to take a car somewhere and I'm getting pushed ads, right? They're not making much margin on each of those car rides, but they're making it up on the super high margin advertising. And they got a ton of first party data to support that. And so there's an argument to be made that a reader revenue first, advertising second business, that's that's the holy grail.
That's a really great way to put that. And you would call the Uber advertising, would you call that retail media advertising? Yeah. Okay. And we can get into that in a little bit, because where I want to go next with this is, you and I were talking about this before we kicked off the podcast, which is what's happening in the M&A market right now. Media and events it's a heavily influenced by PE ownership, right?
Mm-hmm.
And we've got a couple of players out in the market right now who've been trying to sell, and I think there's some characteristics about them, but I'd love your take on. I think a couple are Clarion, QuestX. There are a few out there.
Yeah, so I mean, QuestX obviously tried to go in 2023 or 2024. That deal didn't quite make it across the finish line. I think a number of reasons for that. I think that they will trade at some point in the next 18 months. I think that they're gearing up for that. Just based off of they're making a lot of deals as some bolt-ons to beef up that business. I think the unfortunate thing is Clarion, which when I've talked to some people, they all only have positive things to say about Clarion, with one exception, which is the Chinese assets. And that was, Blackstone bought those assets. Blackstone also bought Clarion, and then Blackstone said, "Hey, we're going to merge them all together." And those assets are really, I think, for Clarion to get a deal done, they're going to have to first figure out how to get the Chinese assets off the books. Like from a geopolitical perspective, the United States and China are getting tenser, not less tense. Clarion's a UK-based company, but the UK tends to row in a very similar direction to the United States. So I think that is certainly something that plays in here. And that's about as far as I'm going to go with my armchair geopolitical analysis. I think next year, the first one to go will likely be Closer Still. I think that their business is in a good place. They've grown both organically and inorganically. I think everyone was waiting for Clarion, but since Clarion's not going, now everyone's looking at Closer Still. And I think that's how this market works, right? Everyone is looking at the one big one to go to set the benchmark so that the rest can go. So if they go, then who follows, right? 19 recapped or did a continuation fund, but at some point they're going to have to trade. There's Hive has been private now for a few years, I think. Yep. But at some point, they're going to have to trade. But I think Closer Still's first. Next year I think Clarion will find a way to sell off its Chinese assets, get a little bit cleaner from what the revenue looks like on the books. QuestX, I'm sure they want to sell. That the hold time has been long, but their PE owners have a big number in mind.
Yeah.
They're going to get it.
Yeah. Do you think, because what's interesting about QuestX is they've seen their growth has been phenomenal, especially, on the event side for sure. I think their digital side has been less so, but do you feel like, is there anything to be said about the business model mix, i.e., straight just events versus events with media? Does that have any play?
So, I mean, QuestX is this year, I think, media across the board has struggled a little bit. There's been a lot of uncertainty, and the worst thing, I think that's also why PE has been a little bit slower, is like uncertainty kills deals. Uncertainty kills advertising, uncertainty is rough, and we live in an uncertain time. Um, I don't believe that like a pure play events business versus like a diversified business like QuestX. Like I don't look at one as better. Actually, I do look at one as better than the other. I look at the media and events one as better than just the events one.
Mm.
I have never understood. I just said this before. I've never understood why you would want to only convene your audience 3 days a year. It's never made sense to me.
Yeah.
Why would you not want to talk to your people regularly?
Right. I agree.
So that, I think QuestX is a premium asset. I think I think when the next deal comes, they almost traded again this year. When the deal finally comes,
Yep.
they'll do well.
No, I agree. And obviously we love QuestX and want them to have a great outcome. So, it's just tough. It's a tough market. And, the one thing I always say about media, especially, is like I call events like the cat with 9 lives. Doesn't matter. Like you can just go at it and it's going to come back. Like events, everyone saw the doom and gloom, the end of events with COVID. Everyone's like, oh, everyone's going to find out that they don't need to travel or meet in person. Like I knew that was horse manure, but super strong. Media has just always has had a harder time of it, especially when Google came out and social media and all of changing algorithms. I remember like Thomas Net's traffic would tank every time Google decided to like sneeze. It's just it's you got to have a lot of grit to be a CEO leading a media company.
You do, but I think, and look, we made these mistakes when I was at ThomasNet. We spent more of our time thinking about Google traffic, and like registration was barely a thing. Mm-hmm. We should have been doing a hell of a lot more to get people registered, figuring out how to convert, build out the features that they needed to integrate into their workflows, right? You got all these companies that are telling you they can do X, Y, and Z. I should be able to log into a tool. I can be able to log into my own tool and be able to just pull ThomasNet's data in there.
Yeah.
Right. Then suddenly Google didn't matter. But I think that every publisher made this mistake with Google, is that we just looked at that traffic and we saw that it was free and we got addicted to it. It was a drug.
Yeah.
But there are a lot of media companies that don't do that. And, they're not killing it like a 40% plus margin trade show.
Right.
They're not killing it like the high price subscription businesses, but they're making it work because they've got high quality newsletter businesses. They've got, they got high quality. I mean, Morning Brew didn't get anything from Google. And that was a business that's grown to $75 million in revenue and profitably.
What do you mean they didn't get anything from Google?
We didn't get a lick of traffic from Google.
Where'd you get your traffic from?
We didn't have traffic. The funny thing is I launched websites and I had no traffic coming to them. We paid to acquire our email subscribers.
Oh, yeah. All right. See, this is foreign to me. This is like, it's Morning Brew started out as a true newsletter. The only way you were going to get Morning Brew is if it was in your inbox.
That was it. And so the nice thing there is that I don't think Austin or Alex ever thought about an algorithmic update in their lives until 2021, when I remember we were in our weekly leadership meeting and Apple had just announced its mail privacy protocol, Apple MPP, which basically was their way of starting to put privacy in the inbox, where in the background they would open all emails that hit Apple Mail the second they hit, even if you as the user didn't open it. Mm-hmm. And so, we had every day, like we were 40% open rates, maybe 0.1 higher, maybe 0.2 higher, but like there was never a day when our open rate was under 40%. MPP rolls out, and over the next 3 to 6 months, suddenly our open rates are 45%, 50%. We didn't get better. It's just that we couldn't trust that open rate mattered. And when you built your entire advertising business on the open rate, that changed a lot. So that was the first time I think that they ever thought about platforms. Mm-hmm, for them, they didn't mind paying to acquire subscribers, create an unbelievably high quality newsletter. The rest was easy.
Yeah, it's terrific. All right. So just going back to AMO, you make money on subscriptions to the newsletter, attendee fees to the event, and sponsorship of the event. And actually, I apologize, also advertising and sponsorship in the newsletter.
Yeah, which is a horrible way to build a business, by the way, at least at my scale. The problem is every one of my businesses is subscale, except the event. The event's actually in a good place now, but like the advertising and the subscription business are both subscale. But yeah, we generate about 25% of our revenue from, no, that's not right. About 20% of our revenue from subscriptions, about 25% of our revenue from digital sponsorship. So that's newsletter ads, webinars, sponsored content, all that. And the rest is the summit. Wow. Historically, the summit has been 60-40 tickets to sponsorships. This year, it was like 53-47 sponsorships to tickets.
Right, right.
So
do you have a vision for expanding? I know you want to scale subscriptions for sure. I mean, I think that's the most exciting in terms of the opportunity, just given how many potential customers there are. Are there any other ideas you have in terms of revenue expansion?
Yeah. So obviously, you said the subscription stuff. I think it's not just individual subscriptions; it's group subscriptions. Which is like one of those things that like you have to sell. But one of the things that I've started to lean into is people want to talk to me, which is like kind of like a newer experience for me. And so I leverage okay, I'll come in and talk to you, but you got to buy a group subscription. And so that's actually worked pretty nicely. So that's one. We're actually launching a second newsletter at AMO next year, covering the events industry. So, we talk about QuestX, which has media and events. So I'd anticipate them reading media and events newsletters. Mm-hmm. But there are a lot of just events only businesses that I'm going to be totally candid with you. The content coverage out there is pitiful. And so we're going to come in and we're going to do a much better job. We're going to write critically of that industry, which that industry has not been written critically about ever.
So true.
That will be this. I mean, it's bad how uncritically it's been written about. So the second will be that events newsletter, which allows us to now start to scale the digital business more. Mm-hmm. And then, then there's a question about what does the AMO Summit grow into? It's 255 people now, but if we expand to cover the events vertical more aggressively, if we start to really lean in to information services, I'm a creator, right, to start. And so is there coverage of the creator economy? You could imagine the AMO Summit kind of grows, to this, is it 600 people? Is it 1,000 people? Mm-hmm. I'm a big fan of the business Raffet has built with Skift and his annual global forum that he holds in New York. He just does an incredible job with the quality of it. And so if I could ever grow my business to that, my event to that, my AMO will never be the size of Skift. We operate in very different industries. But if I could grow the AMO Summit to something like that, that could actually be pretty exciting.
Or have more of them too,
Yeah, I go back and forth on the more or bigger thing. More allows you to go deeper with a specific audience, but smaller events, they still got costs, right? So they still got the fixed cost of a venue. They still you still got to do AV, you still got to print signage, and so fewer people there, fewer sponsors there to handle those costs versus the time center, right? This year, I paid a certain amount of money for the venue. If I added another 50 people, that venue cost doesn't change. And so growing bigger actually does allow you to make better margin.
Yeah, no, for sure. But if you talk like events and information, the information data / services sector. And I also, and this is always, I always tread lightly on this one because it's very hard to go into another country successfully without a partner, but the UK, that's sort of the mecca of events. But anyway, I think there's a ton of opportunity for you. And you definitely could have, I think, single, people buying the media subscription or the events, newsletter subscription, or both, and
Yeah, the way I look at it is AMO Pro is the core subscription product. And so whether you're an events company or you're a media company, AMO Pro is the core. So I'm not gonna treat it as two separate subscriptions, because then I'm just adding even more complexity to my life. It's just two vantage points for you to consume content specific to what your job function or the type of company you work for. And then I'll promote AMO Pro to both of them. But there'll be overlap, right? Like some people in media will read the events thing, some people in the event will read the media thing, and many will read only one of them. But it also just unlocks incremental,
more subscribers. Okay.
more subscribers, more digital revenue, right? Where I can now, if we do a once a week events newsletter that I can get to scale, well, now I can sell ads in that once a week, right? And that takes our ads business, and it grows it for that. Now I can do an events webinar, we can do events deep dives, and it's just adds more.
Yeah, and there's a lot of adjacent advertisers that would not maybe want to just do media only, but have very specific event tech orientation or something like that.
Yeah, you get to enough verticals, three, four of them, where you can tell a business executive story rather than a media operator story or events operator story. And then can you convince a Salesforce to sponsor across the entire thing? Can you convince one of those players? So we'll see. A lot of work to do.
Well, exciting stuff. All right, let's get back to the industry. So what excites you the most about the industries we both serve, and what scares you the most?
I was at an event a couple weeks ago, and John Roberts, who is the Chief Innovation Officer at People Inc., he was talking, and he said, we should be living in the golden age of content. Like, data centers are printing money right now. AI, GPU companies are printing money right now. The AI platforms can raise obscene amounts of money. Those AI platforms require content. So shouldn't the content companies also be printing money? And they're not right now. But the technology is getting better and better, where whether it's Cloudflare or Tollbit or any, ProRata or any of these players, where we might actually get to a point where we're able to start really efficiently blocking AI companies until they pay. And if we get to that point, that's actually an exciting point, because suddenly content matters, right? It's, content really matters, and high quality content matters even more. So I'm actually, I used to be very deathly afraid of AI, like its impact on the industry. And look, it's absolutely going to kill publishers, right? Like anyone dependent on traffic is done for, and it is what it is. But I think that, this is going to introduce a lot of interesting and exciting things. I think the thing that scares me is, can publishers move fast enough when it comes to their content investment to get in the right place? Like B2B media has not invested in content for far too long. And I think they are still too comfortable with very sub quality content. And they won't, none of them will say it, but like they know it. If they look themselves in the mirror, they will say, yeah, I don't publish good content. The issue is, it's very hard to go to your private equity owner and say, we're going to compress EBITDA margins for the next 3 years so we can invest in great content. PE owners like, nope, don't do that. Let's just make sure we can flip you in time. Let the next owner figure it out.
Yeah. So I'll go back to what you just talked about before, which is companies that are reliant on traffic for their business model to work. Media companies are done for. What does that mean for I guess we have to take news out of it, because news is news and people need news. If you're a good news organization, but let's talk about like People Inc., for example, or Hearst or Condé Nast, where they have or Business Insider, or they have content, but they have been super reliant on traffic from Google to serve the ad impressions. Like, how do you see their models evolving and evolving as quickly as they need to survive and thrive?
So if you look at at People as an example, if you look at their earnings 2 years ago, something like 50 or 60% of their traffic came from Google. Look at their earnings now, I think it's something sub 30%. So
Wow.
you might go, holy crap, they have way less traffic than they used to. According to their earnings report, their traffic is up 2 years from 2 years ago.
Well, that's what I thought you were going to say. So they basically, what that number is that their reliance on Google is almost half of what it needed to be. Right. And they're still growing audience. Why do you think that is?
Their traffic sources, right? So they have a great deal with Apple News. They're showing up in other aggregators, and that's driving, I'm sure, traffic. I think that they've invested more in their newsletter business. So if you can convert people, but look, they're also rolling out apps. And look, I have always been pretty anti-app. I just never believed people were going to use like a media company's app. But look, they believe that their app strategy will work, and I haven't seen anything to say otherwise. And if I do, I'll report it. But they rolled out their People app, which is for People magazine, and they're creating content specifically for that app. And then they've also just rolled out a food one that pulls from a number of their food sites. So I think that that's going to help. But I think ultimately, the reason that People will probably be fine, there's two. One, they bought all of Meredith's assets right before the AI thing happened. And so suddenly they bought super premium brands, right? The Meredith brands are the primo brands of that portfolio. And I think that they're leaning into other monetization around that, right? They've got that food and wine festival. I think they do more than one now. And I think that they've really leaned into that opportunity. And I think that they will identify others. For Hearst, they've got great brands. I think that they're still figuring out what to do about the whole drop in traffic. That'll take time. It helps that they're owned by the trust the way they are. So their pressures are a little bit different. They've got a great B2B business to sort of back them up. Yeah. I'm not confident about Business Insider's business. I don't think that look, Business Insider was part of Axel Springer. Morning Brew was part of Axel Springer. I know a number of people over there. If I had to make a prediction, Business Insider will be even smaller next year, and that Morning Brew will become a larger part of the business for Axel than Business Insider, which is just a very discouraging thing because they don't have a clear-cut strategy of how, they say they want to build a subscription business, but if you go to their websites, or at least if this was the case in November, the paywall was hidden because they needed to hit their advertising numbers. You got to decide what matters more. And I'm not bullish on them figuring that out. Who else did you say? You said a fourth.
Condé Nast.
Same thing. They just hired this new editor for Vogue, and she started to talk about the magazine as some really high quality coffee table product. She started to talk about understanding who is her target reader. It's not everybody. And I think that's the problem with a Condé and even a Hearst, and even to some extent some of People's brands on the Meredith side, is some of these brands crushed it for so long because we lived in a bit more of a monoculture era where Anna Wintour was the name, right? And Vogue was the name. Vogue mattered. And does Vogue matter in 2025? Not to as many people as it used to, because you can go find fashion a ton of different places now. And so, it's going to require a reorientation about who is Vogue's core audience.
Yeah.
We have never lived in a more fractured media environment than we do today. And next year will be even more fractured. And the year after that will be even more fractured. And so this is, to some extent, we're entering the era of each individual publication theoretically becoming smaller, not bigger.
Yeah.
So, which is why the reader revenue matters so much, because you need to increase your LTVs. Anyway.
Yeah, no, and it's interesting with all of those all of the companies we just talked about, I mean, and Hearst obviously has a very interesting, unique business environment, and they are very diversified, and it's incredible how much they're doing. And I want to say 50% of the revenues are now B2B.
Yeah, they're doing well.
But all of them actually are leading heavily into events, and
Yes.
successfully or not so much, but they're looking at that as a way for them to diversify revenues. They see the in-person part because now community is becoming more and more important, and events are part of community. All right, but we're running out of time because that's a whole other podcast, is community. So I have one last question before we move into our final rapid fire and closing, which is, because you work with so many CEOs in media and C-level operators, what are the behaviors and decision patterns that you admire most? Like, if you had to name 3.
Oh man. I am, by and large, and this is going to be a slightly different way of answering the question. I am by and large very founder friendly, and I have high conviction in founder run businesses. I have pretty low conviction in executive run businesses. There are exceptions to that. But by and large, when I look at the media companies that I really admire, they're all run by founders. And I think the reason for that is 2. One, they all have a clear-cut voice. They all stand for something. And 2, there is a decisiveness, right? This business is not slow. This business is not like, we're not making widgets. We are we're trying to convince people that they should come back and give us their time. Literally the one thing that shrinks in somebody's life is their time. And so, there is a decisiveness that needs to exist to operate in this business. And I think the reason that some of these bigger companies, excluding people, because actually I think that they are some of the best operators out there. But there are executives in this business that just completely lack the decisiveness to make any decisions, and it shows.
Yep.
So I think that is how I'd answer that. Is I think the companies that are going to do the best are run by founders who are not afraid of decisions. And you can't be a long-term founder if you're afraid of decisions. You just can't.
All right. I can't help myself, because you're totally right. And we're both founders, so we know it. All right. What's the stupidest mistake you've ever made with AMO?
The stupidest mistake I've ever made. Look, I think that I think I have done 2 things wrong with AMO, and both of them happened this year. One, I resisted hiring a salesperson, thinking that, founder-led sales matter. I should go out and do this. They're not going to understand the story. And I think that was more of a fear of the cost than anything else. So that is a mistake I made. And it ties to the second one, which is, from a brand perspective, I actually pulled myself back slightly from the brand. So I don't do the podcast anymore. That's a mistake. I didn't write as much this year as I did in all the previous years. The product became a media operator rather than what people were expecting and known it for, which was Jacob. And the problem with that is I said, okay, I can't do that stuff as much anymore because I need to sell. When in fact, I should hire a salesperson so they can sell, so that I can go relaunch the podcast where I get to ask, operators the hard questions I like to ask. I can write the newsletter, and publish content that way. I can think more strategically and move into the events vertical and launch a creator economy newsletter and, do all these various opportunities where, I am a product person. And when I mean product, I mean content. I'm a content person. I'm a good operator. I know how to operate these businesses. I know how to sell, but I'm a content person. So I should focus on that. I should put myself front and center. I should be loud with what the voice of AMO is. And I think the mistake was this year, I pulled myself back from that because I wanted to build a brand that was bigger than me, and we're not ready for that.
No, right. So number one, the salesperson one, I right with you. So I did the same thing, and the stupidest thing. I mean, there's lots of dumb stuff I've done, but that's top of my list. And for me, it was even worse because I'm a natural born salesperson.
Yeah.
So I had in my head, like a moron, like if no one's going to be able to do it as good as I can. And like it was a little ego there too. I was afraid, like they're going to mess up the pitch. They're not going to say it like I want it. And it really, really, really affected us this year. So we did finally hire someone, but I know how frightening it is. It's also, it could be expensive. What happens if they fail? It's anyway. So yes. So I think it's a common founder-led mistake.
What I am going to say about you specifically is you are far more of a content person than I think you give yourself credit for. There are very few events that I think are good in this industry, right? I go to them. I don't think they're good. The content's not good. The questions that are asked are not good. You are a content person. You produce high quality content. So I think it's good that you hired a salesperson so you can focus on actually what your strength is, which is storytelling.
Well, so that was my second point. And again, this is my newfound superpower is content creation. I never thought I was good at it. I didn't know I enjoyed it so much. I can't wait until I'm like, oh, I get to go write that playbook, or I'm going to putting together the program. And so what happened is with that is even though I'm a salesperson, I just didn't want to sell anymore. I want to do the content. So anyway, That's a great closing. All right. Well, listen, how do people sign up for AMO Pro? And by the way, before you answer, I want to tell everyone who's listening, if you are not a subscriber, subscribe. If you are in this industry and you are not a subscriber to AMO Pro, you are not part of the know. So I'm just going to say that. Tell everyone how to do it.
You can find us at amediaoperator.com. Sign up for the newsletter. AMO Pro is amediaoperator.com/membership. You get access to all of our coverage. You get an invite to a private Slack channel. You save 15% on your ticket to the AMO Summit, which will be in October. I wish I had the date to tell you, but I'm just not quite there yet. But yeah, AMO Pro, we're covering the industry the way the industry deserves to be covered. We are going to write positive things when it's positive. We're going to write critical things when it's critical. It's not personal. I think this industry is a great one. And I think every industry deserves a publication that covers it. And we just happen to be the ones covering this one.
Absolutely. And just also as a side note to everyone about the Slack channel, because it is through the membership, there are lots of dead Slack channels I belong to of community. The AMO Slack channel is not only active, but everyone is incredibly helpful. Like always trying to help one another. You've got a question. It truly does represent great community. So, kudos to Jacob. And we'll also put the link to subscribe in our show notes. And I'll also include Jacob's LinkedIn so you can connect with him. All right. So Jacob, quickly, I love always doing this at the end, and I have special questions for you. What is the most interesting place you've ever traveled to?
I'm kind of boring. Barcelona probably is the most interesting place. I really liked it. I've been there twice now. It's a great city. I can spend all day just walking through the Gothic Quarter, going, and it's just a great place. But my favorite city is Lisbon. Ooh. I love Lisbon.
I got to go. So I lived in Barcelona for 2 years, so I know everything you're talking about. Awesome, lovely, gorgeous place. And then Lisbon's on my list. And finally, what's the best business book you've read this year?
Oh man, the best business book I've read this year. I just finished reading Too Big to Fail, which is Sorkin. I really, really enjoyed it, actually. I graduated college during the financial crisis. And so kind of understanding how everything collapsed in the way it did and how people's political opinions were forced to be put aside so they could actually make decisions to save the economy. I thought it was an incredibly well done book.
Okay, so Too Big to Fail. We'll put that in our book club. All right, Jacob, thank you. I'm going to close out now just with a reminder that the conversation doesn't end here. It continues inside Revenue Room CXO, the only network where CEOs and their revenue critical teams turn AI disruption into growth strategy. And if you want to experience that thinking live, join us at RevvedUp 2026, March 23rd through the 24th at the Vinoy in St. Pete, Florida, where the future of data, AI, and revenue leadership takes the main stage. I'll share links to both in the show notes, along with the way to connect with Jacob and to sign up for AMO Pro. Thank you, Jacob. To our listeners, we'll see you next time.